Welcome to All About Commerce. In today's presentation, we're going to know about insurance introduction. The topics I'm going to cover are the meaning, definition, and the nature of insurance. Let's get into the presentation. First, I will start with an introduction. As we all know, future is uncertain. We cannot assure anything like this type of loss will not happen in my entire life, or this loss will happen on this date, so that I have to be prepared before. Yes, right? So while facing the loss in our life, that loss should not affect our business or our family member or to the owner of that particular asset. This is how the insurance concept was introduced. So here is the meaning of insurance. Insurance is an agreement provided by the insurance company to those who want to cover the risk, specified loss, damage, illness or death in future. There are two parties involved in insurance business. The one is insurer, the insurance company, and the other one is the insured, is the policy holder. The policy holder is the one who gets the insurance policy from the insurance company. Next, insurance is of two types. The first one is life insurance. In life insurance, the death of the policy holder will be covered. Next is general insurance. The loss of any property due to fire, flood, accident or theft or any disaster will be covered. Let's see the definition of the insurance. In the first definition, it was said by the Mr. Patterson. Insurance is a contract by which one party for a compensation called the premium assumes the particular risk of the other party and promises to pay him or his nominee a certain or ascertainable sum of money on a specified contingency. This definition suits for life insurance because here he mentioned that this is a contract between the insurer and the insured. For the premium received by the insurer, he promises to pay to him or his nominee. In life insurance, after the death of the insured, the policy amount will be given to the nominee. So that's what he mentioned here. One thing you have to keep in mind is, in life insurance, the whole policy amount will be given back to the insured person at the end of the policy period or to his nominee after his death. But in general insurance, only the actual loss will be covered by the insurance company. The second definition is very clear that the insurance is an agreement or contract between two parties for getting premium from the insured. The insurer will cover the loss, damage or injury to something which is having a pecuniary interest. Pecuniary interest means a monetary value. For example, if I am getting rupees 10,000 worth of fire insurance policy to my stocks, after a few months I lost rupees 5,000 worth of stocks due to fire. In this case, the insurance company will only cover the actual loss, which is rupees 5,000. They won't give the whole policy amount to me. Next, we will see about the nature of insurance. The first one is contract. Yes, insurance is a contract between two parties. The one party is the insured, another one is the insurer. Next is a consideration. The term consideration means giving something in return. Here, the insured is giving a premium to the insurer, and for that, the insurer is covering the loss of the insured. Next is a cooperative device. If large number of people are facing similar kind of risk in their life, they can pool their money and to cover their losses. Next is protection of financial risk. The insurance company will cover only the monetary loss. Means the insurer will compensate the loss in terms of money only. Next is risk sharing and risk transfer. As I said before, people are having similar kind of risk can group together and they can share their risk among them. Next is based on certain principles. Yes, insurance is based on certain principles. There are 14 principles like insurable interest, utmost good faith, compensation, contribution, etc. You will see the principles in the next video. The next nature of insurance is regulated by law. Life insurance is regulated by Life Insurance Corporation of India Act 1956. General insurance is regulated by General Insurance Business Act 1972. And Insurance Regulatory and Development Authority regulates the fair treatment and interest of the policyholder. Next is value of risk. Before giving the policy to the insured, the insurer will value the risk. According to that evaluation, the premium will be fixed. If the risk is high, the premium will also be high. If the risk is low, the premium will also be low. Next is payment of contingency. Contingency means the event. In life insurance, the death or the expiry of the term will be considered as contingency. In general insurance, the fire accident, marine perils, or any other theft. If that contingency arises, the insurer is liable to pay the compensation. The next is amount of payment. On the happening of the event, the insurer is liable to cover the loss of the insured. The next is huge number of insured persons. If more persons are joined together, the cost of the insurance will be less. If the cost of insurance is less, the premium will also be reduced. So this is a big advantage for the insured persons. The next nature is insurance is not a gambling. In the game of gambling, there are only two possible results. The one is a profit and other one is a loss. But in the insurance, the loss will be indemnified. That means only the actual loss will be covered by the insurer, so that there is no profit or no loss state. Next is insurance is not a charity. Charity is not a contract. Also, there is no expectations in return. But insurance is a contract, so without any compensation, the insurer won't cover any of the loss of the insured. Next is investment portfolio. The insurer will get two sources of income. The one income is from the premium which is getting from the insured, and the other income is from the investment. The profit which he is getting from the policy, he invests the same in any other companies. So that insurer is earning income from two sources. That's it. We completed 14 nature of insurance. Thank you for watching the presentation.